Okay, so we've got this Molly Fool article that you flag, and it's all about these high-yield energy stocks that they
Right.
think you should consider for the really long haul,
Absolute.
decades, not just
Right.
weeks or months, right? So we're going to kind of take a look at why they're making this argument, why they think these particular companies are potentially good investments, ones that can, weather any storms that come their way.
I think it's a fascinating deep dive because the article really focuses on three very distinct players in the energy space.
Right.
We've got Chevron, we've got Enterprise Products Partners, and we have Brookfield Renewable. And so I think the reason why they picked this trio is that it offers you as an investor a really unique look at the energy landscape.
Yeah, it's a good point, especially because you've got this backdrop of, political pressure to keep energy prices low.
Sure.
And you would think that might make energy stocks less appealing, right?
Yeah, you would think so.
But their argument is basically you got to look beyond those short-term,
Yeah.
Political wins and think about companies that have, they've got a solid foundation that can withstand the test of time.
That's the big takeaway here, that political tides ebb and flow, but the need for energy over decades
Yeah.
is much more predictable.
Absolutely. So let's jump into these companies,
Okay.
starting with Chevron. So they're this, huge kind of behemoth,
Okay.
diversified integrated energy company
Yes.
with this super strong balance sheet and a long history of just growing their dividends.
I love that they focus on the integrated piece because that's what makes Chevron
Right.
so resilient.
Right.
Because they're involved in every single step
Yes.
of the process. So upstream, midstream, and downstream.
Yeah. So explain that a little bit. You hear those terms upstream and midstream.
Absolutely. So, the upstream business is the exploration and production.
Okay.
The finding of the oil and gas
Okay.
and the pulling it out of the ground.
Yeah.
That's upstream.
Got it.
Midstream is all of the transportation
Okay.
and the storage, of those materials.
Got it.
And then downstream is actually taking those raw materials and refining them
Okay.
and turning them into things like gasoline or jet fuel
Yeah.
and then actually selling them
Yeah.
to consumers. So the fact that they are so diverse and they play in every aspect of this business really means that they are a shock absorber. If oil prices take a dip and maybe their upstream business gets affected, their downstream business could actually benefit.
Right. Right. So it's like built-in stability in a way.
That's right.
Okay, now what about their balance sheet? The article highlights a debt-to-equity ratio of 0.16.
Yeah, 0.16 times, which is so low.
Yeah, super low. What does that practically mean for someone listening to this who's like, okay, why should I care?
Well, what that signals is that Chevron is not heavily reliant on borrowing money to run its business,
Okay.
which gives them so much flexibility. It gives them flexibility to invest in the business.
Yeah.
It gives them the flexibility to ride out any downturns.
Yeah.
And critically for, dividend investors,
Yeah.
it gives them the flexibility and the confidence
Right.
to continue those dividend payments even when times are tough.
Right. Less debt, more options.
Exactly.
And speaking of the dividends, they've got 37 years straight of increasing
It's amazing.
the dividend payout.
I mean, that's the kind of consistency that you want to see as a long-term income investor.
Yeah. What's that really saying? I mean, you've got multiple different economic cycles and, energy market ups and downs.
Yeah, and that kind of track record isn't just about consistent payouts. It shows a financial discipline
Yeah.
and a management philosophy that really, really cares about returning value to the shareholder.
Right.
And we've seen them navigate, lots of different cycles.
Yeah.
And they have always found a way to increase those payouts year after year.
Yeah.
And that says so much about the strength of their underlying business and their dedication
Yeah.
to shareholder value. And on top of that, you have this current dividend yield as of March 2025 at 4.3%,
Yeah. That's not bad at all.
which is really a meaningful return right now.
Yeah, definitely. And if you're thinking about retirement, down the road, that kind of consistent income
Yes.
can be a real cornerstone of the portfolio.
Yes, absolutely.
Okay, so let's move on to Enterprise Products Partners. This is the second one
Okay.
that the article highlights. And their big thing is, this midstream focus
Yeah.
and this really juicy distribution yield. So this is a very different kind of company
Yes, it is a very different model.
compared to Chevron.
Yeah, so we talked about how, Enterprise is in that midstream space.
Right.
But their revenue engine isn't directly tied to the price of oil and gas.
Okay.
Their real revenue comes from the fees
Okay.
that they charge for moving and storing these energy products.
Right.
So things like natural gas, crude oil, refined fuels. Imagine them as sort of owning the highways and the storage facilities of the energy world.
Right.
They're getting a toll based on the volume that goes through their system.
Yeah, so it's more about that volume than the actual, like, price fluctuations,
Exactly.
you know?
Yeah, and the article makes a really good point that this means that they have less direct exposure
Right.
to the price of the commodities.
Yeah, why is that important for you?
Because, that need for transportation storage is a lot more stable
Yeah.
than the price of oil and gas. Think about it, the price of gas at the pump might go up and down every week, but the need to move that crude oil to refineries
Right,
and then that gasoline to consumers, that's pretty consistent.
right. You're always going to need to move it.
You always need to move it.
Yeah.
And so this model is based on fees, and it gives them a much more predictable and consistent revenue stream,
Yeah.
which in turn can support their distributions to you as an investor.
And they're paying out a 6.3%.
Yeah, 6.3% distribution yield, which is really attractive.
He's huge.
And they have an investment-grade balance sheet,
Yeah.
which gives you a sense of confidence that they're able to
Right.
meet those obligations.
They're not going to go belly up.
Exactly. And the article highlights that their distributable cash flow is 1.7 times their distribution,
Okay.
which means they're making a lot more money than they're paying out,
Yeah, that's good.
which means there's a huge cushion
Yeah.
to not only maintain, but also to grow those distributions in the future.
Yeah. So for someone who's listening to this and maybe they really like that idea of getting that high income, but they're not so sure about, the price of oil and gas going up and down.
I think this is a great option
Yeah, this is a really good way to do it.
because you're participating in this infrastructure that underpins the entire energy sector,
Right.
but you're a little bit insulated
Right.
from those direct commodity price swings. And they've got a great track record, too, 26 years
Right.
of increasing those distributions.
Okay, so that's Enterprise Products Partners.
Yeah.
Let's finish up this trio with Brookfield Renewable.
Okay.
So they're all about clean energy.
DR.
And the article, really emphasizes that this is a sector
Yes,
that everyone thinks is going to grow like crazy in the years to come.
that's right.
So Brookfield owns, tons of different renewable energy projects.
Hydroelectric dams,
Yeah.
wind farms,
Yeah.
solar energy storage facilities.
Yeah.
And their whole investment thesis hinges on this idea that the demand for clean energy
Yeah.
is going to skyrocket as the world tries to move to a more sustainable future.
Yeah.
And that creates huge growth opportunities for the companies in that space.
Okay, so they've got two different share classes, BEP and BEPC.
Right.
And the article points out that they have slightly different dividend yields.
That's right. So the BEP shares are yielding 6.5%,
Okay,
and the BEPC shares are yielding 5.2%.
got it. And it points out that it's the same underlying business.
It's the same business.
It's just because of, market demand for BEPC.
Yeah, a lot of times these nuances in share class structures
Yeah.
are about things like, index inclusion or, investor preferences about taxes or
Right, yeah.
voting rights. But the key takeaway is the underlying assets and the economic performance.
Right.
That's the same.
Got it. Okay, so the article talks about how Brookfield Renewable had a record year in 2024.
Yeah, 10% jump
Yeah.
in funds from operations, which is
So they're making money.
they're doing well.
Okay.
And the management is very optimistic.
Okay.
They're pointing to rising electricity demand. They're pointing to the growing appeal of renewables.
Okay.
And they have a huge pipeline of projects.
So why are these things so important?
Well, these are the three main ingredients for growth in renewables.
Okay.
So first, you've got this rising demand for electricity, and that's being driven by things like, electric vehicles,
Yeah.
increasing digitalization.
Yeah.
And that means there's just a bigger market for everybody who's generating electricity. Then you've got the fact that renewables are becoming more and more attractive.
Okay.
Their costs are coming down. They're now competitive with or even cheaper than fossil fuels in a lot of places.
Right.
You have supportive government policies,
Yeah.
and you have a global focus on sustainability.
Yeah.
So that's the second big reason.
Okay.
And then the third big reason is this pipeline of projects.
Right.
Because it means that they have a plan to capitalize on all of this.
Yeah.
They're not just sitting there, they're actively developing and bringing more capacity online.
Got it. Okay, so they also increased their dividend this year by 5%,
That's right.
continuing that, trend of dividend growth.
They're on a roll.
The article also mentions this interesting dynamic where mature clean energy assets are actually selling at really good prices.
Yes.
But then less mature projects are available really cheap.
Yes.
And that seems to be a good thing for Brookfield. How does that actually benefit them?
Well, it creates this really interesting environment for Brookfield because they can sell these mature assets
Yeah.
at really great prices.
Okay.
and then take that money and reinvest it
Yeah.
in these new projects
Got it.
that you've huge growth potential. And Brookfield, because they're so experienced in developing and operating these renewable projects,
Yeah.
they've got the expertise to go in and buy these projects and really make them work.
So it's like recycling their capital in a way.
Exactly. It's capital recycling at its finest.
Okay, so for someone who's listening who's maybe thinking about, diversifying away from just traditional energy,
Sure.
what are the potential benefits of having Brookfield Renewable?
Well, I think it gives you exposure to a sector that's going to see massive growth
Yeah.
in the future. And it helps to balance out your risk
Yeah.
by reducing your reliance on those fossil fuel markets,
Right.
which could be really volatile.
Yeah.
And I think for a lot of investors, there's also the element of aligning your investments with your values.
Yeah.
A lot of people really care about sustainability.
Okay, so this all ties back into the article's big message of, think in decades, not days,
Yeah.
for dividend safety.
Yeah.
So why is that so important, especially when you're thinking about retirement?
Well, investing for retirement is a long game. It's a marathon.
Yeah.
It's easy to get distracted by all the noise and the ups and downs.
Yeah.
But what really matters is the fundamental strengths
Yeah.
of the companies that you own.
Right.
Do they have strong balance sheets? Have they paid growing dividends?
Right.
Can they survive all kinds of economic
Yeah.
challenges?
Right.
That's what's going to create that reliable income stream
Yeah.
that can support you for years.
And that's not about trying to time the market.
No.
That's about picking the right companies
It's that
for the
thing.
long haul.
That's right.
Okay, so the article concludes by saying that these three companies, Chevron Enterprise Products Partners and Brookfield Renewable,
Yeah.
they basically offer this really good balance between, dividend income and risk
That's a really nice blend.
for different kinds of investors.
Yes.
So as you're thinking about these companies, what do you think are the most important things to consider?
Well, I think it comes down to what are your goals as an investor
Yeah.
and how much risk are you comfortable with?
Yeah.
So, if you like that long and stable track record and you like this big diversified energy giant,
Yeah.
Chevron might be a good choice.
Right.
If you want a really high current yield and you don't want to be as exposed to those commodity price swings,
Yeah.
Enterprise Products Partners might be your best bet.
Got it.
And then if you're excited about clean energy and you want to invest in that long-term growth,
Yeah.
Brookfield Renewable is a great opportunity.
Yeah, so there's something there for everyone, depending
Exactly.
on their needs. Okay, so let's just do a quick recap for those who are listening.
Okay.
So Chevron gives you that broad exposure to the energy landscape. They've
Yeah.
got a really solid history of dividend growth,
Absolutely.
and they've got this rock-solid balance sheet.
Yeah, fortress balance sheet.
Then you've got Enterprise Products Partners. Yeah. They've got that really high yield right now, 6.3%.
Yes.
And they're in this midstream infrastructure business, which means they're not as affected by those commodity price swings.
Right.
And then finally, you have Brookfield Renewable,
That's right.
which is all about the clean energy transition.
Yeah.
They've got significant growth potential.
Yes.
And they've got good yields across both of their share classes.
Absolutely.
So that's the trio.
That's that trio.
And the key takeaway is that, think about this as a long-term play.
Yeah.
These aren't, get-rich-quick schemes. This
Yeah.
is about building wealth
That's right.
and generating income over many years.
Yeah.
So as you're doing your research, thinking about these companies,
Yeah.
I want you to consider this. Each of them has a different role in this energy landscape that's constantly changing.
Okay,
So you've got Chevron, which is this big integrated place.
yeah.
You've got Enterprise, which is all about that midstream infrastructure.
Yes.
And you've got Brookfield, which is really, spearheading the move
Yes.
to clean energy. So what trends do you think are going to have the biggest impact
Yeah.
on their performance in the long run? Something to really think about
A lot to consider.
as you're, looking at this space and making your investment decisions.
Absolutely.
Awesome. Well, thanks for joining us for this deep dive,
It's been a pleasure.
and we'll see you next time.
See you then.